guys, and welcome to mock exam 2. We're doing internet cars and the topics covered: risk assessment, there's your substantive procedures, and the Companies Act. Okay, so you got 30 minutes to get through the scenario. Once your 30 minutes are up, stop reading, go and read the required, understand what is going to be expected of you in this question, and then you can go and look in the scenario for the specific answers instead of just reading and wasting your time. So, background information. Internet Cars Pty Limited, so I can see that they are private, which means they can't be listed, which means some of the requirements in the Companies Act are not as strict as if it were a public company. Is an online car advertising site. So now I can see what they do, online car advertising site. So they aren't going to have inventory. So this is just to understand the type of industry they're in. They are advertising, but it's all computerized. Customers pay to advertise the cars they wish to sell on the Internet Cars website. Internet Cars has two types of customers: private sellers attempting to sell their own vehicles, and car dealerships who advertise all vehicles stocked at their dealership. So two types of customers, just to be aware. Internet Cars does not own the cars nor has any claim to the cars loaded on their website. The company was incorporated in 1999, so I can see if they're still around, they're pretty established, by its two founding members, and over the years has grown into the leading online cars advertising sites in South Africa. So over the years they've grown into the leading. So once again, I feel like they are a going concern based on that information. It hasn't mentioned that it's been rapid growth, so I'm not going to put a risk there. The company has branches in all the major cities in South Africa, so financial statement level risk because they're decentralized. And therefore, if the controls are not operating the same at each of the branches, there could be risks. Guys, just because they don't have inventory at the branches doesn't mean that risk goes away, because they might do accounting at the different branches. And so the controls around the accounting need to be adhered to. The controls around implementing and uploading these vehicles onto their sites to make sure that they don't have vehicles that aren't getting paid for on the site need to be there. So it's the fact that they're split up means there could be different controls at the different branches, and so there's a risk. In recent years, Internet Cars has explored the potential of offering car advertising services in other African countries, and in the 2020 financial year achieved success in Mozambique, where Internet Cars now has a dedicated online car advertising site. So they are in foreign countries, so there is a risk at the financial statement level that they don't comply with foreign regulation. Then at the assertion level with regards to the revenue, for the accuracy of the translation, there is a potential risk. We don't have that cut-off risk now for inventory over year end because there's no inventory. Internet Cars has a significant loyal customer base, so if it's a significant size, there's a risk that either they might be recording that shouldn't be there, or potentially they don't record because it's so big that they get lost. Okay, so I'm going to put down two risks here for my debtors, assertion level with debtors for either existence or completeness because of the large base. And then that will then bring a risk with regards to my revenue. And again, occurrence or completeness because of the increased volume of transactions. In the year under review, Internet Cars turnover increased by 10% from 976 million to 1.74 billion. So, increase in revenue. I've got a assertion level risk with regards to the occurrence of revenue. But what I can see is obviously that they are doing well. And so this, for me, would indicate that they are, once again, a going concern. For the first time exceeding the 1 billion threshold in sales, while gaining market share for the 8th year in a row, showing that they are going concern and doing really well. The board of directors believes that this represents sound performance, achieving the 1 billion sales target required by the performance incentive scheme, despite the challenging conditions that existed in the motor industry. So that says the board of directors believe this is because of sound performance, that they say they achieved the 1 billion sales target required by the performance incentive scheme. So actually now we've got an assertion level risk with regards to the occurrence of revenue, because there was a performance incentive scheme. Requirements of 1 billion. So now, did they really achieve it, or was that recorded in order to have success in this performance incentive scheme? Despite the challenging conditions that existed in the motor industry, so challenging conditions in the motor industry, now we've got potential concern with the ability to continue. If motor industry has challenging conditions that affect their own business, can they continue? The CEO of Internet Cars, Mr. Zoom, attributed these challenging conditions to COVID-19, the global pandemic that shoved the world and the economy into lockdown. Internet Cars remained operational during the lockdown as staff at the various branches continued to work from home. Dealerships were, however, forced to close for 3 months of the lockdown, which meant no cars could be sold. So, if dealerships had to sell or had to close, there's a potential threat to the going concern, because if they aren't going to advertise their cars because they can't sell the cars, how does that impact on Internet Cars? Many dealerships requested a freeze on their subscriptions during these months to compensate for a lack of revenue. So once again, here we're seeing now freeze on their subscriptions, so we're going to have an assertion level risk with regards to occurrence of revenue if they are recorded when they should be freezed. And we've got, once additionally, the going concern factor. When dealership trading commenced, business for the dealerships was slow as a result of customers' lack of disposable income, which once again negatively affected the dealerships. Okay, so having a lack of disposable income affecting dealerships will affect the going concern of Internet Cars. He stated in the CEO's report that the prolonged lockdown was damaging to the motor industry, with many dealerships having to close doors and many more to close in the foreseeable future. So, if many are going to close in the foreseeable future, financial statement level, going concern for Internet Cars. The board of directors of Internet Cars are all experienced and have the necessary qualifications. So this is a positive for my good corporate governance. The board of directors maintain high standards of corporate governance, integrity and sustainability. So another indicator. During the 2020 financial year, Internet Cars embarked on a new venture to reduce their carbon footprints on the environment. They did this by planting enough trees to offset the carbon emissions produced by the cars their staff use. Their ultimate goal is to plant enough trees to offset the carbon emissions produced by the cars on their online advertising sites. So once again, this is good corporate governance. We're seeing their social considerations and community. As you have been the senior audit manager, so to note your experience of Internet Cars for the past 7 years, so you've been there for 7 years. So just from a CPC perspective, we've got to consider, is there long association and therefore a familiarity threat to your independence? you have a good understanding of the client, including its internal control systems. Guys, I haven't mentioned anything about the Companies Act yet because I haven't seen that the partner has been there for 7 years. So until such time that I can see it's the actual partner, we don't have a non-compliance with Companies Act. Good understanding of the client and its internal control systems. You regard the company to be well administered and are particularly impressed with the design and implementation of internal controls over the real-time accounting system. So it looks like we're going to be relying on controls. And it also tells me that they have a strong control environment. As in the previous years, you intend to rely on these controls. Okay, so let's just make that a tick then. The following documents have been prepared by the audit team. An extract from the draft financial statements, Appendix A, Revenue, Working Paper A5, Performance Incentive Plan, Working Paper C1, Minutes of Directors Meetings, Appendix B, Conclusion Workings, Working Paper D10. Okay, so Appendix A. Following is an extract from the draft financial statement. So we've got sales are down in South Africa, but up because they've expanded into Mozambique. So total sales is up, and we are just questioning that. Cost of sales is up, gross profits up, net profits down, but still a profit nonetheless. Total receivables is up, which we expect because the customers are potentially struggling to settle. Okay, customers from South Africa up, and then the allowance for credit losses is up. So there's no notes about customers from Mozambique. And I'm just going to make a question there then. Cash is down, trade payables is up, non-current liabilities up, non-current assets down, and shareholders' equity and reserves is down. But positive to note that it is in credit. So what we can see then is that they are liquid because current assets of trade receivables and your cash together exceed current liabilities of just the 81. So there are current assets are greater than current liabilities, and total assets, trade receivables, cash, plus my non-current, together will exceed the total liabilities. So I am liquid, solvent. So that's quite cool. N1, allowance for credit losses. Notes. The detailed calculation for the allowance for credit losses is available. Trade receivables contain no significant financing component. Internet Cars uses the provision matrix as a practical expedient as suggested by IFRS 9 financial instruments. So what we do know is that the simple method is applicable here because they don't have that financing component. So it's slightly easier to determine the allowance for credit losses. Working paper A5 and its revenue. At this point, guys, we haven't seen what the year end is, but I can see it showing my working papers, 31 May 2020. Revenue. Internet Cars generates revenue from the sale of advertising space on their websites. 98% of the cars advertised on their website belong to car dealerships, with the remaining 2% belonging to private sellers. So they did mention the two different types. So, revenue from car dealerships. Car dealerships pay a monthly subscription to advertise their cars on Internet Cars websites. Dealerships select one of 3 packages available, dependent on the number of vehicles they wish to advertise on a monthly basis. The packages available are A, 1 to 20 cars at a cost of $50,000 per month, B, 21 to 50 cars at a cost of 125,000 per month. Package C, 51 to 80 cars at a cost of 200,000 per month and 3,000 per month for every car over 80. Okay, so all I'm seeing here is that there's different revenue, and so there's going to be a risk at the assertion level with regards to the accuracy of revenue if the incorrect package is used for a customer. Car dealerships are invoiced on the 1st of every month and payment is due within 30 days from invoice date. So they invoiced on the 1st, but payment is due on the 30th, so this is where we get our debtors. But they should all be current because they've got 30-day terms. My concern quickly, if they invoice at the beginning of the month for what's going to be advertised for the month, then there's going to be a risk at the assertion level with your occurrence and cutoff of revenue, because surely they should be recognizing the revenue over the period for which the cars are being advertised. Dealerships are required to give 1 month's notice if they intend to stop advertising on the website. Revenue from private sellers. Private sellers are required to register on the Internet Cars website. A unique email address and password are requested in order to register. So, access controls to register. Password controls, just to note. On completion of registration, a one-time password is emailed to the private seller's email address, so an additional access control. And it is only on entering this one-time password that a customer account is opened. The customer is then prompted, so there's a prompt, to enter the details of the car they wish to sell, and it is mandatory to upload a photo of the car, mandatory field. As soon as all the fields are completed, the customer is required to click the checkout field. So required mandatory field. On selection of the checkout field, a summary of the advert is displayed and the customer is prompted, so prompt, to tick the tick box that they have checked the advert and agree that all details are correct. So here's a check, physical check to make sure the details are correct. The customer is then automatically directed to a secure payment site, so there's an auto control here. Secure payment site, so an access control there to make sure it's secure, where the customer is required to enter in credit card details to make payment of 5,000 Rand for the advert, which will be displayed on the website for a month from the date of payment. Okay, so they have to enter their credit card details. So we know that there's going to have to be alphanumerical fields there. There's going to have to be a size check there. And it's going to have to be valid. Okay, I can see now the payment is 5,000, so we've got a different costing. So you're going to have assertion level with regards to your revenue accuracy when looking at private dealers. Revenue from Mozambique. Internet Cars has not had enough exposure in Mozambique to develop packages for the dealerships. As such, each customer, whether dealership or private, is required to register on the Mozambican website following the same steps noted above under revenue from private sellers. Once registered and the advert has been loaded and checked by the customer is automatically directed to a secure payment site. The customer is required to enter credit card details to make payment of MT 22,000, so MT is Mozambican Metical, the Mozambican currency. So now we've got a different amount and have assertion level risk with regards to revenue, with regards to the accuracy of the translation for recording it, and now the accuracy because there's a different type of costing for Mozambican. The advert is then displayed on the website for a month from the date of payment. So what I can see here is that for both private seller and for Mozambique, there is no customer or no debtor, they get revenue recorded for cash. As soon as the payment is cleared, it gets recorded. My concern for both, once again, is that the advert is for a month, but they are going to record the revenue immediately. So we're going to have for both of them a risk at the assertion level with regards to your occurrence and once again cutoff of revenue, because it's not over the period. So it's recorded up front. Internet cars, websites and accounting systems are integrated on a real-time basis. So as soon as payment is cleared from the bank for revenue from private sellers and the Mozambican revenue, the advert goes live on the website and the revenue is recorded. So that's where we see now revenue is recorded. All I'm going to make a note here is there's a risk at the financial statement level because of this computer information system being integrated. And it's all of your risks here. The risks of hackers, the risks of errors on the website, they're now being accounted for in the accounting system as revenue. Working paper C1, Performance Incentive Plan. Performance Incentive Plan on 1 June 2019, so that's the beginning of the year, because year ends 31 May 2020. Internet Cars announced an employee performance incentive plan in order to motivate eligible employees to achieve their corporate targets. These targets include becoming a 1 billion revenue entity and further increasing their market share. So that was an assertion level risk with regards to the occurrence of your revenue. Eligible employees are those employees who were in Internet Cars employed from 1 June 2019. So here is your criteria. Employees who leave before the dates indicated in the following paragraphs forfeit their share of the bonus pool, and there's no reallocation of the bonus entitled to fellow employees. Terms of the performance incentive plan are as follows. Got a cash incentive scheme. A bonus pool will be made available to eligible employees payable in cash on 30 June 2020. So that is in the next financial year, provided that the employee is still in Internet Cars employ at that date. So now we see that there's criteria. They must have been employed from 1 June 2019 and still employed by 30 June 2020. An employee's individual share of the bonus pool is based on a ratio of his/her salary to the annual total salary expense per the statement of profit and loss for the period of 1 June 2019 to 31 May 2020. So it's going to be your salary divided by the total salary for the year, the 2020 year. Since there are movements in the number of employees during the year, any bonus not allocated is not reallocated between employees who do qualify for a bonus. The bonus pool size is determined as follows. 10% of the amount by which revenue for the 2020 financial year exceeds the budgeted revenue of 1 billion, multiplied by the tech compliance factor. So you're going to go 10% times by whatever is above the 1 billion, multiplied by the tech compliance factor. The tech compliance factor is the percentage of clean tech audits over tech audits during the financial year 2020. So that factor is the number of clean audits divided by total audits. Share incentive scheme. A total of 50,000 share options are awarded to eligible employees on 1 June 2019. Just going to make a note here, Companies Act, in terms of the authorization. And these were awarded also to, if you were eligible on 1 June 2019, at no cost, provided they are still employed by Internet Cars on 30 June 2020. So the same criteria as above. Each option entitles the eligible employee to acquire shares of Internet Cars on 30 June 2020 at 15 Rand per share. So on the 30th of June, the share price for these is 15 Rand. The number of shares that an eligible employee is entitled to for each option is dependent on Internet Cars' closing share price on 30 June 2020. So the number of shares is determined as follows. Closing share price on 30 June, number of shares per option exercise. So if it's between 15 and 21, 20 and 25, 2, 25 and 33, more than 34. Internet Cars' closing share price and fair value per option were as follows. 1 June 2019, 23, and closing share price was 15. 31 May 2020, for fair value per option and closing price of shares 11. Additional information. It is expected that an average of 1% of the employees that are on the payroll on 1 June 2019 will leave the employ of Internet Cars each month. From 1 June 2019 to 31 May 2020, 13% of employees on 1 June 2019 payroll actually left Internet Cars. So there's a 13% loss of staff. Actual revenue amounted to 1074 billion. So it's going to be the 74 million times by the 10% for that cash bonus. During the financial year, Internet Cars was subject to 7 tech compliance inspections or tech audits, and 2 of those failed. So the number of clean is therefore 5 divided by 7. During a conference call on the 25th of May 2020 between the senior management of Internet Cars and equity investment analysts, the analysts indicated a market consensus 6-month forecast share price target for Internet Cars of 14 Rand. Guys, you don't have time to freak out and start doing calculations. You're doing your reading time, so you're just making the notes that you can. Appendix B. Minutes of Directors meeting held on 10 January 2020. So this year, all directors of the board were present. So all. We've got Mr. Zoom, the CEO, Mrs. Sele, Financial Director, Mr. Imoto, Chairman and Independent Non-Executive Director, Mrs. Speed, Independent Non-Executive Director, Mr. Carr, Marketing Director. So all I can see here, from a board perspective, they've got non-compliance with King because there are 3 execs to 2 non-execs, but of those 2 non-execs, 2 are independent, so they meet that second tier of the majority being independent. They've got a chairman who's an independent non-executive, so that's great, and there's just no mention of a lead independent non-executive. Okay. Looking at the board just in terms of diversity, I would say they look good. There's males, there's females. From a surname perspective, there appears to be diversity in race, and the only thing is there's no discussion of their qualifications, but I can't discuss that until I see any concerns. Opening. Mr. Imoto welcomed everyone to the first meeting of 2020. He wished each director a successful year and declared the meeting open. Minutes of the previous meeting held on 24 November 2019 were approved by all the directors. You can see they had a meeting a couple of months ago, which shows that they are obviously meeting regularly. Agenda. The directors agreed to use the notice of the meeting as the agenda, as there were no other issues that needed to be addressed. The following item was included in the notice that was distributed to all directors on the 23rd of December 2019. So they received their notice on the 23rd of December. This is the 10th of January, so there has been sufficient time for the notice. Issue of shares to Mrs. Carr. Mr. Imoto informed the board that Mr. Carr joined Internet Cars on 20 June 2019 and therefore did not qualify for the share options issued as part of the performance incentive scheme. The board agreed that his hard work during the second half of 2019 should, however, be rewarded, and all directors present voted in favor of issuing 10,000 shares to Mrs. Carr. So, all directors present voted in favor. So what we've got here is issue of shares to a related party of a director. And so there is non-compliance because there was no special resolution passed. Issuing of shares to directors requires a special resolution. Here, all the directors issued, so there's a concern. If it was just to anybody, the directors have the ability to issue shares, but this is to a director's related party. The shares were issued to Mrs. Carr instead of Mr. Carr in order to bypass the requirements of a shareholder's special resolution for the issue of shares to a director. So they tried to scheme to not get the special resolution. So I've got here potential, reckless trading. They are intending to defraud the shareholders by issuing it to the director's wife instead of the directors, so that they don't have to be involved. So that's a big concern there. My second concern is also their lack of knowledge of the Companies Act, because even though they issue it to her, they still need a special resolution from the Companies Act perspective. They don't really bypass that. Okay, so my biggest concern there was their intention, and as a result of that, potentially have a reportable irregularity. The shares are to be issued at 8 Rand per share on 31 May 2020. So the shares are going to go at 8 Rand. 31 May 2020, I'm sure we've got an idea of what the shares were. So here's, I would actually go and have a look quickly. 11 Rand was the closing price of shares. They issued them at 8, so there's a difference. 3 Rand per share. So this would indicate financial assistance. And then I've got non-compliance with Section 44 of the Companies Act because there was no special resolution for financial assistance for the shares. Also, it's my board's responsibility to determine a fair share price. Is this a fair consideration? And with all of this, I now have to make a note here, director's conduct. Risk at the financial statement level for management integrity. I've got non-compliance with Companies Act, so as soon as I've got non-compliance, I've got non-compliance with King in terms of laws and regulation adhering to. Closure. Mr. Immortal thanked everyone for their participation in the meeting and called the meeting adjourned. Working paper D10. Following audit work is outstanding for reasons noted below. Audits of post-reporting date events. Management have not yet identified the company's post-reporting date events. So this is a bit of a concern and therefore assertion level risk with regards to the completeness of your post-reporting date events. Going concern assessments. Management have not performed the going concern assessment. So now, is this a scope limitation? Is this an indication that there is a concern with the going concern? Schedule of audit differences. The audit team has requested supporting documents to verify multiple transactions. To date, these supporting documents are still pending. So once again, we have a scope limitation. Okay, so maybe a concern here with management integrity. After all, let's have a look at the required